We are.
Perfect. Okay. Hello, hello, hello. How is everyone today? You two at least that can talk back.
I know, right? I'm good. I'm good. I'm good. I like the topic that we're offering today. The car buying experience is going to probably one of the funner topics that we're going to be able to discuss. Everybody loves shopping for cars, and what better way to give them some excitement than to talk about things people love to do, right?
Yeah. Yep. The excitement of a new vehicle or even a used new to you vehicle is super exciting. Sometimes the approval process and the negotiation process is a little intimidating. So we're really glad to bring this topic to the table today. I think this is our second time teaching on this one. So really excited about that. Couple of housekeeping things. Don't forget, guys, if you are watching this on Facebook Live, we do not answer questions through the webinar on Facebook Live. So make sure that you click through to the link to visit the actual webinar if you want to submit a question for Q&A. That is where we will be discussing any specific questions that people bring up, but we can certainly respond to any comments that you make after today's live session is over. And keep in mind that we want you to make sure, we really, really, really hope that you're taking advantage of our MoneyWi curriculum. There is a plethora of really awesome topics there, and we hope that you'll take the time to go explore the many different options that are out there for you. If you go to envisioncu.com/moneywise, you will be able to click through to self-guided playlists and modules. So every month we do a drawing for a $100 Visa gift card for one winner. And that person qualifies by completing an entire playlist. So a whole playlist might have 4 or 5 different modules of a similar topic. So be sure to go there, and keep in mind the modules are short. Like some people go, well, that sounds like a lot of work to get $100. It's really not. Minutes. They're 3 to 6 minutes long. Yeah. But what we love about MoneyWi modules is that they are customizable. Like there are certain parts that you can interact with that are specific to you. So there are some general topics, of course, but then you can also, there's little embedded activities within that you can kind of plug in things that are specific to you that can help things hit a little bit, more personal for you. So I really hope you guys will do that. All right, let's jump in. Today we're talking about buying a car. We're going to talk about not just the car buying process, like picking it out and things to ask yourself and some of the language of buying a car, but we'll talk a little bit about the negotiation process a bit, empower you a little bit so you're more knowledgeable when you start the process or restart the process. Some of you guys are pros at it. Some of you guys have your go-to dealership, your go-to salesperson. You have a great relationship with them, but most people don't have that, especially if you're a first-time auto buyer or if you are getting a loan for the first time for a car. So there's just a lot to kind of talk about and a lot for us to go over today. And then we'll talk about the approval process. We're going to talk about the difference between what we call direct lending or indirect lending. We'll talk a little bit about those things because you need to know all of it. And so we want to make sure that you've got a great understanding of all of those things. So let me go ahead and click on my screen share here so that you can see our presentation. If at any point, guys, just kind of let me know if for some reason we're not going in the right direction, and I will have to stop and pause.
All right.
All right. So in today's workshop, like we mentioned, we're going to talk about all of these things. I won't bore you because we need to move on and we have a lot to go over. We probably are going to need all of our time today. All right. So what is the true cost of owning a vehicle? It's a little different for all of us. Other than just the car itself, it's important for you to know that there are other things. I wouldn't call them hidden costs, but costs that we often forget when we're going to buy a car. Okay, so there's dealer fees, there's sales tax, title fees, add-ons, APR. I think most people know what all of these things are, but real quick, a dealer fee is simply, literally, it's a tagline on the buyer's order that is it's just a guaranteed fee the dealership gets. It is usually not negotiable at all. It is always on the buyer's order. And that's just extra cushion for them. Also, they know that there's negotiation power that both their sales managers as well as you as the consumer have. So that dealer
they call it the cost of doing business, Kelly, is what. That's the cost of doing business.
That's right. And I worked in the car business for about 9 years. And I remember year over year, it seemed like that dealer fee got higher and higher. But I also worked in the car business from 2004 until about 2012-ish. And so I think the dealer fee crept up because negotiation and buying a car changed so much, because that was when the market crashed in 2009. Remember Cash for Clunkers, if any of you guys were around for that. And so people were negotiating and dealerships were not making as much money as they had in the past. So anyways, sales tax, obviously we all got to pay Uncle Sam. Title fees, that is, for the DMV cost and registration and things like that. Tag fees as well. Other add-ons, so there might be other bells and whistles that you might add on there at the dealership. They're not a part of the actual, basic tools and, things like that on the vehicle. And then there's your APR. Your rate is going to determine how much you pay for your vehicle. There's your the cost of gas, there's the efficiency and mileage of the vehicle, there's insurance. Oh my gosh, there's just so much. And then there's maintenance. Woo, my head is spinning. So let's talk real quick about the must-haves and the nice-to-haves. So you probably can't see it behind me, but I have a really fun quote that I found when preparing for today's workshop. And I modified it just a bit to my liking, but it says, let me turn around and see it. It says, too many people spend money they haven't earned to buy things they don't need to impress people they don't even like.
Ooh-wee.
Like,
whoa, that's powerful right there, man.
I liked it so much. It's like, I am writing that up on our wall, but I wanted to share that today because I think when it comes to buying a car, a lot of us really think a lot about what we think other people are going to think about us.
Say that again. You're preaching. That's spot on true. That's spot on true.
And you've seen them. Some of you guys, you're honest. You're like, yes, I like to have a nice ride, and I like people to know that I have a nice ride. That's okay. That's okay. Mm-hmm. What we want to talk to you about is the financial impact of the must-haves versus the nice-to-haves, that want versus need kind of thing. Must-haves, obviously, we want to make sure that you are you have something that has great gas mileage and fuel efficiency, safety features that are important to you based on your needs for you or your family, the age of the vehicle, reviews, how well it's held up in reviews. Nice to have type things, right? Might be a specific make and model, specific color, add-ons like the big wheels and those sort of things, or the exhaust. There's nothing more annoying to me than sitting at a red light or enjoying my ride with my windows
wait for
down,
it. Here it comes.
right? And then it's like all this loudness coming by me. It's like, is that necessary? Like, I see you. I'm never going to see you again. You know what I mean? Like, I can't have a conversation with that person, but hey, that is their prerogative. If they like to have that, so be it. Those things come with a cost. I see you. I hear you. All the things you know, like even sitting right here in the office, we working downtown, this red light right here on the corner of Monroe downtown. It's like when a car with like an awesome sound system, right, is stopped at the red light, but it's like you're in the middle of a conversation with somebody or working and all you can hear is boom, boom, boom all around you, right? Yeah. So good. Anyways, okay, so let's move in and talk a little bit about list price versus actual price. So a listed price is going to be the advertised price, right? So this is a great car. This is what it would be at MSRP, manufacturer suggested retail price. Your price today is going to be $18,999 after your rebate. However, when you go to sit down in the finance office right? Or what they call the business office. And you look at the bottom line, you're like, wait a second, we talked about $18.99 or $18,999, and you're now telling me it's $20,200. Help me break all this down. Okay. So keep in mind when you're shopping for a vehicle, the vehicle price is the vehicle price, and then all those other add-ons. Okay. And what you're going to pay, whether it's cash or financing, that bottom line at that bottom of that buyer's order is the number that we really want to focus on here. So knowing what your total due and what you can afford as your total final estimate helps you narrow down what the price of the vehicle needs to be based on the cost of all those things. Okay. The other thing's not even listed here, which we'll talk about in a little bit: gas, insurance, maintenance. None of that is on that buyer's order. This is just to purchase the vehicle from the dealership. Okay. Obviously, keeping in mind, guys, that when you're purchasing from a private owner, these things look a little different. You're not gonna have to pay a dealer fee, obviously, when you do that. Your tag and registration fees are typically paid directly to the DMV, so you're not gonna do that to that individual. So keeping in mind all of those things. Some other costs to consider is that there are reports out there, so I really encourage you to go do your homework on the different, how much annually they guesstimate, experts in the auto industry guesstimate how much upkeep or cost of owning a vehicle is for each of the categories. So as you can see here, the annual cost for a small car, like a small sedan, might cost $6,000. Again, that's insurance, the auto loan itself, all of that stuff, gas, maintenance. But if you look at a pickup truck, could be up to 10,000. Okay.
Yeah.
And like your registration and DMV fees are typically based on the weight of the vehicle. So sometimes the bigger, or the type of car, it might be a sports car with a really big engine in it, right?
All
so
of everything factors in. Everything factors in.
It sure does. So keep that in mind. Okay. And then monthly averages. So I took the liberty of looking up what the current averages are. There's a lot of places that you can go to find statistics. And we've talked about some of these statistics before in some of our previous workshops, but the average loan payment right now on payment on a new car is about $554. On a used car, it's about $391. Those are the averages that we're seeing the last quarter of 2019. So maintenance and fuel is going to vary, of course, depending upon the fuel efficiency of the vehicle that you're driving.
Yes.
How much upkeep might be. If you're getting a vehicle that's a lot older, you might have more in maintenance costs than you do a vehicle that's newer, things like that. Insurance is going to vary as well based on the age of the person insured, the driver, your history with your insurance company and things like that. The average is about $100 a month is what national average is. So it looks like right here, the average cost of owning a vehicle is about $825. Okay, so that's not just the loan, but that's the loan, the maintenance, insurance, all of that. So it kind of gives you an idea. So we're going to talk a little bit about how do you determine how much you can afford. Okay, I'm going to pause for just a second and remind you guys, in our budgeting workshop that we did a couple of weeks back, we introduced to you guys the 50-30-20 rule. Okay, so how much of your income should I set aside for different things? And I don't know if you guys remember what the recommendation was for transportation, but for transportation, it's recommended 10 to 15% of your gross monthly income going to towards transportation.
Say that again, Kelly. Say that again. Say that one more time. That 10% speaks volume to their overall gross income. I think that's where there's a struggle with consumers today. Like you said on your quote on the wall, is that it's obvious in that alone. So I think it's imperative that you repeat that 10% is a recommended percentage based on your monthly gross income. So please, if you don't mind, just once more, just for those that keep popping in.
Yes, I mean 10 and 2, this is on gross. Your gross is not your net. So for those of you who are learning about some of the language, gross is no it's before all of your like deductions and other things that might be deducted out of your check. So it's based on your salary amount, right? Your net is what you actually bring home. So your numbers are, I always like to operate on net, but when it comes to your lenders, from a, you know, trying to figure out what your capacity might be of taking on new debt and things like that, it's always calculated on gross. So there's a big gray area right there for me. I don't like, I mean, to me, that's a fine line to ride as well. So if you're not sure, because most of us, we fall in love with a vehicle, or we know that we need a new vehicle, or it's time for us to get a new vehicle. But we don't stop and back up and go, okay, let me start first by figuring out how much should my monthly car payment be based on what I make, as opposed to it, we say, how can I make it work based on the car I want to get, you know? And so it, you know, it becomes, that's how we just kind of, those averages just kind of get higher and higher. So let's move on here. So there's 4 different payment options, which most of us know about. Cash, you're paying it up front. Your ownership of it is immediate. Then there's the direct lending. Direct lending is you're kind of pre-approved through your financing company, like your financial institution, your bank, your credit union, that sort of thing. Dealership financing is that kind of that indirect lending that I was telling you about at the very beginning. This is where financing of the vehicle is set up at the dealership. At the time of purchase. It's not based on relationship banking. It's just based on kind of convenience. And, you know, an agreement is then typically sold to the financial institution who underwrites your loan. That's kind of how it works. So you don't have as much say when you're doing the dealership financing, or choice rather. You're not usually presented with choices. I'll talk about this in just very briefly, just for a little bit. We don't talk about it too deep, but there are some important things I want to make sure that we point out to you today. And then there's leasing. So leasing is very much like renting. The cars usually return to the dealer after a certain set time. There can be restrictions on the car, like mileage, dings and dents and things like that. You know, with leasing, people go, I grew up thinking leasing was a bad thing, but then when I worked in the car business for a little while, I got to know the type of consumer that commonly leases vehicles. And I learned that leasing can be a great option for people. And actually, there's probably, to be honest with you, more people who purchase cars that should probably lease, because they're so upside down whenever they want to get a new vehicle that they would have saved a lot of money had they done leasing. And I usually say, and this is my personal opinion, so you can take it and do whatever you want to with it, but I know everyone's experiences are different. But for me, I think that people who are good candidates for leasing, or that leasing is a good option for them, is someone who always likes to be in a like new vehicle, and always expects to have a car payment. Yes. That's okay. That is okay, because there are a lot of great leasing programs out there where you don't have to pay a lot down up front. You pay a minimal monthly fee each month to use that vehicle.
And the restrictions aren't so tight. So sometimes it isn't, like you said, that specific type of consumer. It's an advantage for them.
They don't have to worry about wear and tear.
Yes. Maintenance is already scheduled in there, so that's one less headache. There's a number of things that can contribute to it being a favorable lease for you, but you just have to, again, understand.
Yeah, exactly. So, I mean, there's a lot of disadvantages for it for people who it's not a good option for. So, you know, a lot of times I remember, you know, working with customers, oftentimes at both the dealerships that I worked at. And a lot of times people they were in just these $10,000, $15,000 upside down on vehicles that they bought brand new just 3 or 4 years ago. They had a 6-year term on it. So they still have 2 years left on it, and they're still upside down all that money. But go back and look at their history. They've always had a car payment since they graduated from high school. They've always had a car payment, and they drive, you know, it's like, okay, so you're not someone who's typically going to keep your vehicles for a certain, you know, longer period of time. So you got to be honest with yourself and ask yourself those things. I'm not saying go out and lease a vehicle today. just look at your options, consider what your options might be. I think a lot of times we kind of we tell ourselves stories in our own head to convince ourselves why something should or shouldn't be a good idea. You know what I mean? To kind of justify the decision we already made before we started the process, because we don't want to.
You're preaching today, man. I'm telling you, man. I am, man. Like, I'm behind you on this one today, man. Bring it, Kels. You're speaking the truth.
So
90% of the purchases in the consumer world right now are surrounding vehicles and their attempt to purchase. So yeah, lay it all out for them.
Yeah. Go see what your options are. Okay, so dealer financing. Let me hop back to this dealership financing. Let me hop back to this for just a minute. A lot of people choose dealership financing for two reasons. One, they actually didn't choose it. They kind of got stuck with it because they didn't get pre-approved before they walked on the dealership lot. Okay. Typically they feel like, okay, well, it's too much of a hassle for me now to have to go get pre-approved with my financial institution that I have a 30-year relationship with, or X number of, relationship with. But because I'm here, I'll just go ahead and use one of their financing companies. And so, that's one reason. The other thing is a lot of folks fall in love with a car or the idea of what they want before. And so they go on impulse, well, let's just go test drive it today and see what happens. And so, and then they just kind of get sucked into this, black hole and that they can't pull themselves out of. And so I think, preparing ahead of time and being as prepared as you can financially for a decision like this is, there can be some advantages to doing the dealership financing because it is convenient. It's right there. And they do have great relationships with lenders. However, one thing that we see a lot with members that we work with is that, especially members who are in a desperate situation, like maybe their car has stopped working on them and they need wheels really quickly, or, what have you. I think sometimes people don't realize that there's this thing called what we call shotgun. They shotgun your credit out. And so, you might say, and first of all, let me put a little disclaimer in here. Not all dealerships do this. Okay. Some dealerships are,
reputable,
but I don't know I don't know what dealership door you may or may not walk into. Correct. That's lining whatever auto alleys you have in the town that you live in.
Right.
So not all of them do this, but oftentimes we will see where a member's credit report has been pulled multiple times in a short window of time. And that's what we call shotgunning. It's kind of almost like the finance company there. You fill out one application, they toss your credit report or pull your credit and toss the application out to multiple potential lenders. It's kind of like throwing noodles up against the wall to see what sticks,
Yep.
And then they get one or two responses back. At least they tell you that. You don't know what to come back.
You better preach. You better get off the pulpit. Tell them, Kelly. I'm telling you, man, you're sharing the secrets. These are the things that the dealerships do not want you to know. While we do have a tremendous amount of relationships with car dealers, and Kelly, I'll give it back to you in just a second. We're mindful of the way that other dealerships respond to you as a consumer. So these are the things that we're sharing with you. These are the hidden gems that we share. We're going to tell you, right? These are the things you're not supposed to know as a consumer. Yeah. Impulse, make the purchase, leave the lot, and get to the next person. That's what salesmen are trained to do. They're not trained to create a rapport and a relationship with you. They need to get that signature on that line just as quick as possible, right? They work on commission. So understand that what Kelly is sharing with you is not every single dealership, but there are dealerships out there that prey on those that do not protect themselves. And that's all Kelly is trying to do, is help you protect.
Yeah. And I think it's okay for you to walk in and ask them, what is your process for this? And actually you won't even have to do that if you're working with your financial institution. That's the whole point. Right. We want to take that part of that stress level out for you, because you already know walking into the door what you can and can't afford. That's the goal, is that you've gotten pre-approved. We work through some of these things together. And so you kind of avoid a lot of that. Most name brand manufacturer dealerships are going to be pretty legitimate. It's some of those other smaller mom and pop type places that you want to be really careful of if there's not an actual manufacturer brand at that particular dealership. those are the ones that are usually a little more sketchy, for lack of a better word. So just be cautious. If you need a referral to a great dealership, we can help you with that. But even better, we have an auto buying program right here at the credit union, so that you don't have to do all that. So, okay, let me move on because we have a lot to still go over. All right, DTI is super easy to calculate. Kelly, can you tell everyone real quick, what's the formula for calculating your DTI?
So it's your DTI is your monthly debts. And we talked about this before, but it's your debts that report to the credit bureau. So
Right.
it's not your electric bill and things like that. It's just anything that would show up on your credit report, your credit cards, car payment, house payment, things like that. So you take your monthly debts and you divide it by your gross monthly income. And again, your gross income is what you start out with, not what you end up with in your paycheck, what you start out with before everything gets deducted. So
Right.
You're going to take your monthly debts divided by your income, and that's your DTI percentage.
Exactly. So
Yeah.
debt to income ratio. So your debt to income ratio, the reason why it's so important, and we talk about this in our mortgage one as well, our home buying workshop. DTI is what is going to help a lender. They're going to see kind of what your credit history is, or like what your current weight
Ability.
of your credit is right now, but also, do you have the capacity to take on more?
Mhm.
That's kind of where that number's coming from.
Mhm.
Now, this is a crazy algorithm, but it's actually really simple. So follow with me. A represents your payment amount. This is how you calculate your interest. A is your payment amount. B is your initial principal, so the loan amount. R is your interest rate per period. N is the total number of payments or periods. So in this example, Thomas here, his principal amount is $25,000. His rate is 6%. His number of payments is 48 months. So knowing all of those three, we can calculate how much he's going to pay in interest over the life of the loan. Okay, so his monthly payment is going to be $587. He's going to pay a total amount of $28,182 over the whole life of the loan. And of that 28,000, 3,000 of it is interest. Okay, now let's talk a little bit about how much the rate can make a difference in those numbers. Okay, so assuming that Sari buys the same car at the same price, but her rate is 2% less at 4%, same term, same amount. If you take a look here, her monthly payment is about $20, $23 less a month, which to some of you guys, you're like, it's $25, who cares? Again, it may matter to some, may not matter to any of you. Total payments, if you look here, she's saving about $1,100 over the life of the loan. So she's saving about $1,100 in interest, just in interest over the life of the loan. $1,100 may be a lot to you guys over 4 years. It may not be a lot to you guys over 4 years, but imagine if you got a new vehicle every 4 or 6 years, because some people might pay it off and then drive it for 2 years and then they itch for another new car. So they get another one 6 years after buying the first one, right? So over time, if you do that a lot over a lifetime, that's a lot of money, So the reason why I want to bring this one up to you guys is because, okay, so rate, like I know that you don't have control over what your rate is, but you actually do. It's all in time. So think about your rate kind of being a time issue. So some of you guys, because you may or may not know what your credit score is, but you're itching to buy that car, you go do it anyways and just deal with the rate you're going to get, versus how close am I to the next tier that would allow me to qualify for a lower interest rate or a promo interest rate, right? So a lot of financial institutions, credit unions pride ourselves in this. We have wonderful promo rates. There are requirements you have to follow in order to get that, but they're simple. It's model year of the vehicle, right? How many miles are on it? Those sort of things. Sometimes there's, certain products you already have with that preferred financial institution so that you can qualify, whether it's you have a checking account with them or a credit card, or you pay auto pay. through payroll deduction, things like that. So find out what those things are with your preferred financial institution and find out if you can qualify. Because if you could qualify for 2.99% promo rate, how cool would that be? Like, you'd save a lot more, right? Kelly, did you want to say something?
Yeah, I wanted to throw in that, you know, a lot of times we look at $1,100 and think that's really not that big of a deal when you're looking between what the two of them spent. But then if you think about it in like an oil change, that would cover your oil changes for that whole 48 months. You know, I mean, it's something like that. When you think about it on the small thing, oh, it's only $20 difference a month, but that's what you're paying in interest. That's free money to whoever gave you the loan because you didn't qualify for 4%, you qualified for 6%. So you're throwing money away that you could be spending on your car.
Exactly. Or other debt that you might have.
Or other debt. Yeah.
Absolutely. I mean, $1,100, could you imagine an extra $1,100 on some of your high interest credit cards, you know, or things like that? So the other thing here is which loan costs the borrower less in terms of, you know, the loan terms and the interest rate. So looking at years, a lot of people, y'all, the average, I didn't do any research on the average length of time, but I believe the average loan for an auto loan is now 6 years. 6 years. When I started in the car business, it was 3 and 4 years, 36 months. You know, that is just nuts. So absolutely nuts. So not only is the average payment still 500 or whatever, but it's 500 for 6 years versus 500 for 4 years. That's just craziness. So let's move on because I think we kind of got that. So now I'm going to introduce to you another rule. So kind of like the 50, 30, 20 with budgeting. When it comes to the auto loan, we liked to practice the 20-4-10 rule. Super easy. Herschel, read these for us.
Be happy to. Make a down payment of at least 20%. Plan to finance a car for no more than 4 years. Don't let your total monthly car expenses be more than 10% of your gross monthly income. 20-4-10.
Okay. So, you know, here's, again, I feel like I'm in math class today teaching you guys math. I did not particularly like math when I was younger, so we won't stay on this slide very long. But it just kind of helps you. You know, it's really easy. If your dream car is $32,000, 20% of 32 is $6,400. Okay, so consider, do you have a trade? Do you have cash down? 6,400 is going to be my magic number there, right? If I want to put 20% down. Okay, and then kind of gives you an idea of what would my term need to be in order to make that payment that I can afford within my 10%, right? Not exceeding 10%. Now remember, we're talking transportation cost in general, not just the car. So if my goal is $500 a month, my loan plus my insurance plus my gas and maintenance. Woo! I ain't gonna be able to get it. I ain't gonna be able to get a $32,000 car.
What about the other protection products as well that are going to protect you outside of the normal things that would typically happen in the car? So that's Kelly, spot on. 500 needs to be everything.
That's craziness. Like, so maybe that dream car ain't gonna happen right now. Like, it's kind of what we're getting at. Or maybe that's where we're really talking about wants versus needs. You know what I mean? I remember the first couple of cars I ever bought, I never put money down unless I had a trade-in. You know, it's like money down on a car purchase was not anything that I ever thought of, you know, but now that I'm older and, you know,
Wiser.
I guess, but as you think about, okay, so like right now, I would love to get a new car. My car's been paid for 2 years. I don't have a car payment. It's wonderful. I do love my car, but it's like, oh, but I see that car and I'm like, I think I would love for that to be my next car. Right. But then I know how much that car is even used. Like, and it's like, whoa, how much money would I have to save to put down to make that an affordable loan payment for me? And then how long would that take me to save? Like, that's where I'm naturally thinking now, because there is no way I'm going to walk in and get a loan for the full amount of that vehicle. Like, there is no way, unless it has running water and a toilet in it. I don't think it's going to be a very good option for me unless there's like a pull-out sofa and I can fit my family of 4 in it. Okay. So seriously, for some of us, it would be more affordable for us to get a good used camper,
Yeah, agreed.
like a vacation camper, than it would be to buy a car that just does what? Drives us to and from point A and point B. Okay. Then I started thinking about all the people that I drive by me, and I'm like, okay, nice rims, that you look good. Like, I can't even see who you are driving it because your windows are so dark, right? So it's like, but
What did you say? I can see all of you. What did you say earlier with the wheels? And
I see you. I see you. I hear you. I ain't never gonna see you again, probably. But there are some cars are there some cars in town where you're like, I see that truck every single day, all over town. Like, not just in your neck of the woods where you live. It's like, it is nuts because they might have a really unique vehicle. So, okay. So when you're ready to buy a car, three quick things: research your options, look at published car reviews. If I recall correctly, back in the day when I was in the car business, I think they said the average person starts researching a car for a purchase 12 months before they actually purchase it. So like a seed is planted and you're already thinking about, so whether you realize it or not, you're either going on to the vehicle. I know my husband is over this. My husband looked for a very long time because he knew exactly what kind of truck he wanted, but we couldn't find it anywhere. So he had started researching for a long time. And then all of a sudden, one day he gets a little notification. There's the truck he's been waiting for about 18 months. Wow. And it's like, and we had saved up money for a deposit. Like, okay, it's go time. So then we didn't have to worry about the emotional stress of buying a car. Yeah. Or should I do it? Should I not do it? Because like, this is the one we've been waiting for. Yeah. Boom, let's go. And we were able to, get it within days of seeing it online. And that's the power that you really want to have as a consumer. Mm-hmm. You don't want to have to worry about, is my credit score what it needs to be to get approval, to get this rate and all this stuff. I don't have to worry about getting approved at the dealership because I'm already pre-approved here. That process can be very quick with us, especially online. You can get your app going in online. If you've got a great relationship with a member service representative in one of our financial centers, you can call them up or email them up really fast, and we can get approval done pretty darn fast for you so that you're ready to go. And our approvals last for 60 days, by the way. So if you feel like you're gonna be able to find what you need within a 60-day window, you can go ahead and get pre-approved now. Start shopping, go through our auto advisor program, and they can do a lot of that work for you. Research vehicle price ranges. Number 2, shop around. Shop online and with local dealers. Shop around for financing options with dealers or loan options with direct lenders. We don't want you to do that. We want you to get approved with us. Negotiate the total cost of the car with a salesperson, as well as negotiating your loan or financing terms. If you don't want to negotiate, or if you're uncomfortable negotiating and you are a member of Envision Credit Union, write this email address down, and I want you guys to email us, and we are going to hook you up with Don, our wonderful auto advisor. He has a great relationship with a lot of the dealerships all over the North Florida and South Georgia region, our whole member area, and he represents you as the member. We have members who pick up their vehicles right here in our financial center lots that never step foot on the dealership floor, and they never have to negotiate with a salesperson.
Yep.
So I am one of those people.
Yes.
Because I don't like to negotiate. And in my family, we've probably bought 8 or 9 cars through Don. Best experience ever. I got my loans with the credit union. I knew what the rate and what my payment was going to be before I ever started shopping. I never had to step foot on the lot, and I got the car that I wanted.
Exactly. Yep. And he works really great with a lot of the local salespeople. We have salespeople driving cars here, meeting the member here, getting the paperwork done here. Nowadays with COVID, they're driving to your home, so it can be very, very convenient for you. But so that email address is community@envisioncu.com. Email us if you are in the market for a vehicle, new or used. And if you would like to start the pre-approval process with us and Don to do some of that negotiating with you through our auto advisor program, I recommend it. And the market is kind of, with COVID, I think they're a little motivated to move some things. And so Don kind of knows what's going on in the marketplace and kind of can help advise you on, how negotiation practices that he might be able to do with a dealership. What I love too about Don is when he knows what a member is pre-approved for, and he still helps them save money by still negotiating the price down on behalf of the member, and not just, he doesn't just have a deal with the dealership. And I love that because he's working for us. He's not working for the dealership. And I love that because he has the member's best interest at heart. So he's not going to go, well, they were pre-approved for 30. Can you get us out the door at 30? He's going to say, nah, I know with this vehicle, we can get this down to say 28 or 21, whatever, and save some money for the member. So I absolutely love that.
Yep.
And then there's examining, well, hang on. There was a thought that came to mind that I wanted to back up, but I'm not sure I'm going to remember it now. I may have gotten a little too far, but I wanted to talk a little bit about something else. Let me see. Nope, it's okay. Maybe it'll come to me near the end. So examining the contracts, make sure you read that buyer's order and the contract and go through. It sounds like a lot of paperwork. It's actually very simple though. If you just read everything, interest rate, purchase price, bottom line, read the small print in between if you have a chance to do that. I know it sounds like a lot because they kind of zip through because you've got all these things to sign.
And Kelly, keep in mind, they're not obligated to sign at that very moment. If they feel compelled that they have a relationship with someone who has their interest at heart, such as their lender or whoever it is that they've established rapport with to help them throughout this car buying experience, take that contract and sit down with them and let them do that with you. Like, go through it. That's what
Great advice. Great advice. Absolutely. We can help you with that. I mean, some places, put a binder down if you wanted to put a quick little deposit down that's refundable to kind of hold it, let them know, I seriously want this. I just need a little bit of time to kind of figure out how some of these things are calculated. And the other thing that we haven't really talked about, but Herschel brought it up, is some of the other add-ons might be you might get a mechanical breakdown. Keep in mind, we also offer that through here at the credit union. You don't have to go through the dealership. So compare, shop prices, and just say, what does your extended warranty cover, or what is your certified warranty cover? What does it not cover? Do you have a warranty option that I can purchase that does cover those things in the event that this 4-year-old vehicle that I have has a mechanical issue down the road, and things like that. So ask those questions.
And one thing, if they're trying to get you to sign that contract right then and there, and they're giving you a little pressure, walk away. Don't sign it just because you feel like you have to sign it because they're telling you that somebody else is looking at the car or something like that. Walk away. It's just a car. Yeah. It's not that. There's another one just like it somewhere else. So if you're not comfortable or something's not right, speak up and then be prepared to walk away if they don't want to work with you.
Yeah, absolutely. Just some things here. Again, depending on where you finance your vehicle through, be careful about paying your loan off early. If you're with the credit union, that's not going to be an issue for you. But if you do end up doing some other kind of creative financing, be careful if there's any prepayment penalties, especially if there's if you do like a buy here, pay here kind of thing. We want you to be out of those situations, but a lot of times there's prepayment penalties there. Make sure that if you do pay any extra, your payments go into principal. Ask questions about how payments are applied. Pay your bills on time. Pay your bills on time. I think this is like a new tagline for our department because like whether it's the debt management, the understanding credit scores, the budgeting one, this is huge. Make sure that you pay on time. Remember, 35% of your credit score is made up of your payment history. So if you are late, that is going to have the highest impact on your credit score if you're paying late. So be careful of that. You also
what if I only pay half of it, Kelly, or if I don't have it all? Can I just pay a little bit and it'd be okay?
No, it's kind of like a bucket. The payment doesn't apply until that bucket is full of the full amount. So it's like they don't dump that payment over and say that cycle has been satisfied with a payment until the full amount down to the penny has been paid.
Yeah, and one thing you need to be prepared, you may call your lender and say, I can only pay a half a payment, and they say that's fine. That's fine. You can pay the half payment, but it's going to affect your credit until you make the full payment.
It's still going to mark as a late pay. Absolutely. Absolutely. So today we really talked about, in summary, The car is going to cost you more than than just the purchase price of the vehicle. Okay. Be sure that you know your extra fees. Go ahead and get a quote ahead of time on what insurance would be on that vehicle. If you're purchasing a vehicle
Yes,
for one of
ma'am.
your children, find out what is insurance going to be on this car for my child. A lot of times people, especially for teenagers, they will go buy a car and then find out what the insurance is. And they're like, oh my gosh, why is it so high? Well, one, they're a new driver, they're a teenager, their gender, actually boys, I think cost more because boys are going to play a little bit more in the street. And boys are more prone to have accidents because of a little rambunctiousness. So, go find out what the quotes are going to be on a particular vehicle before you make the decision, because that can cost you a lot more extra than you realize. And then we talked about your ability to get a loan, your loan terms, and that these things are influenced by your credit worthiness. We talked about what your car payment options are as far as, who you finance with. When comparing a loan and financing options, it's important to make sure you're looking at the rates, the APR, the length of the loan, and I'll add a little line here, and also the time of purchase. When should I purchase? When is a good time for me to make this investment? Do I have money down? Do I not have money down? How long would it take me to get the money down? I know that sounds like a lot, but we have taught amazing tools to you, or provided amazing tools to you through our debt management piece, our workshop, through through making budgets work. So whether you are watching this pre-recording or you're listening to the audio through our podcast, we want to make sure that you know that there are past resources you can go back and reference if we've sparked a little bit of interest in your mind today, or maybe you're, how do I get to that step? How do I start with calculating these things for me? How do I know if it's a good time for me? So a lot of questions, a lot of things that we went over. Let me share some other stats with you. So the average rate for a new car right now that consumers paid in the end of 2019, what do you guys guess that it is?
3%.
So in our area, that is good, but not all people that are buying new cars have great credit. So the average new car rate that people paid at the end of 2019 was actually 5.76%. That means that people who have not so great credit are buying new vehicles. And so if they want a new vehicle, they have to pay for the rate. The rate is really what's probably making a big difference there. But regionally, our average is about 3.25 in our part of the country for the most part. The average used car rate, this is gonna blow your minds, 9.49%.
I was gonna say 8%. Yeah.
Guys,
Wow,
that's nuts.
that's huge.
That is huge.
That's average. That's average. That's average. That's not those that have challenge credit that have to, again, take advantage of the convenience approach that are typically handed out at the dealership, indirect lending, that style or that fashion of lending. So again, Kelly quoted the average. That does not mean that's the category you may fall into. So
yep. And then new car loan amount, so like principal amount, not just the purchase, not just the car, but total amount financed. The average for a new car purchase price out the door, $37,000.
35. I was about to say 35. I believe it is just, it's insane.
And that's why they're now spread out over 6 years, because
Plus.
Well,
that and because people don't have money down.
Yep.
Yeah.
And so their term is going out further because they don't have a trade-in or they don't have enough to put down or what have you. Used car finance amount average is $20,000. It's $20,000. So, you can use that information and I got some of this information from Experian reports, USA Today sources, and other financial industry type companies. You can go out there and do some research as well. But those are some of the, you know, common averages that we're seeing these days. And again, I think a lot of people feel like they're stuck or like they don't have any influence over any of those things, but you actually have influence over all of those things. You have influence over what your rate's going to be, at what you can control, right? You can work, you could spend the next 6 to 12 months working on increasing your credit score so that you qualify for promo rate. So again, do I need a car right now? Or do I have, if you've been a good steward of your money and you've got a little bit of cushion, let's say you have $2,000 or $3,000 in your savings account, could you buy a car cash to get you through to the next 12 months while you continue to save, and then put your 20% down on the car that you really want with the rate that you really deserve because you've worked
And
so
trade
hard.
the car in that you're currently driving.
Sure. Absolutely.
A lot of different options.
Yeah, and then you do have a little bit of negotiating power, you know, with what those vehicle sale prices are going to be. So you have a lot more power than you realize that you do. You're not stuck. You can't control it. And again, I think a lot of it is tied to how much time are you allowing yourself? Are you being honest with yourself about wants versus needs, right? And are you buying a vehicle that's within your income, that allows your income, right? Or are you wanting to live a life outside of what's
I got you, Kelly.
reasonable?
Too many people spend money they haven't
They don't have
earned, right? To
buy
impress
things
the things. There you
that
go.
they don't need to impress people they don't even like. I love it. I absolutely love that quote. It is so true. So where are you on that spectrum? Are you one of those people that spends more money than you earn? Are you spending it on things that you don't need? And what is your motivation? Are you spending it on things to impress other people? You know, or because anyways, I think we've talked enough about it. All right, we don't have any internal questions here on the webinar from our attendees. So I think that means we are thorough as always. We are excited to bring you guys some more topics in the next few weeks. We've got next week retirement, and then we've got considering home ownership after that. And we are excited to bring you webinars all through the month of September. And then we've got something really exciting coming down the pike in the next few months that we are going to share with you later, but you're going to have to come back to find out what it is. I kind of already spilled the beans a little bit, but
Just a tad bit. They'd have to watch it. They'd have to watch it again now, Kelly.
Not sure if anybody caught it, but we'll see. So I'm really excited about it. We've got wonderful curriculum and wonderful ideas to share with you guys. And I mean, I look forward to my Wednesdays. I look forward to teaching. I look forward to, gathering with you guys through our new office space here in Zoom, and, bringing ideas and enlightenment to our members who so deserve it. And so hopefully you all that are watching this have learned a lot today. Be sure to go check out our MoneyWise page, right, for the self-guided curriculum, envisioncu.com/MoneyWise. Don't forget to do the playlist to be entered to win a $100 Visa gift card. And I think we're done. Woo! It's lunchtime, folks.
It's time to eat. Kelly, hey, listen, you preach gospel today. I don't have anything more. I'm just going to drop the mic for you right now at this point because you did a fine job of bringing this to our viewers. Thank you.
Yeah, thank you both for your input. And I look forward to talking about retirement next week.
Yay.
Let's do it.
Yay. Okay. Bye, guys. See ya.
Bye.
See ya.